Tesla recently announced a possible stock split. The electric car brand made headlines after announcing it would seek approval for a stock split later this year. Is it time to make a purchase? Tesla's stock price has risen since it was announced in late March, despite the fact that the proposed split is still in the early stages and little information is available about it. Experts say it is almost impossible to predict whether the upcoming stock split will produce similar results or not. No, the stock last had a stock split in 2020. When is a good time to invest in Tesla? When were you on the fence about it? Should you invest before or after the split? Keep watching to find out. A stock split occurs when a company divides its shares into smaller shares, lowering the price. Since Tesla's stock price is now around $1,000 per share, and the company opts for a 2-for-1 stock split, for example, twice as many shares would be available at half the price, or $500 per share. Experts say stock splits don't change much about a stock. The company's market value remains unchanged. Those who already own the stock will receive more shares as a result of the split, but the total value of the stock will remain the same. However, they may make expensive stocks more attractive to investors with a limited budget. For many investors, paying $1,000 for a single stock is out of reach. However, if the price drops to $200 per share after a stock split, it may be more affordable for the average investor. So what difference does timing make when it comes to the actual value of the stock? Whether you buy it now or wait until after the partition will make little difference. Stock splits don't affect a company's valuation, so investing at a lower price doesn't necessarily mean you're getting a better deal. You simply control a smaller portion of the company. A stock split is basically a method of dividing existing shares into smaller parts for easier access. As a result, the total number of shares outstanding rises while the stock price falls. This can be compared to cutting fresh pizza into slices. Splitting the pizza into pieces doesn't change anything, but it makes it easier to share and eat, while the split would make Tesla accessible to more investors and expand the company's audience and reach. What does it mean for investors who want to buy the stock before the split? The upside of investing now is that you stand to profit if the stock price rises as a result of a split, as it did in 2020. However, stock splits can sometimes revive investor interest in a company if that happens, so investing now before a split could yield big rewards. However, no one estimates whether Tesla's price will rise as a result of the split. No one knows when this potential stock split will take place, as the economic climate has changed since the last stock split in 2020. As a result, it's difficult to predict how the split will affect Tesla's stock price, although the idea is unlikely to face much opposition. The company will need shareholder approval before it can pay dividends to facilitate the split. News of the split came just days after Amazon and Google announced a stock split. Amazon and Google will split their shares 20-1, each on June 3 and July 1, respectively. GameStop is now following suit, although we have no idea how much Tesla will split or when it will happen. If history is any guide, it may happen soon. Tesla's second stock split in 2 years is actually rare. Microsoft's series of mini splits in the 1990s and Amazon's 3 splits in 1998 and 1990 are perhaps the most comparable examples. However, compared to the previous Tesla split, this series had lower split ratios. Like many investors, you may be wondering why Tesla would split its stock. Well, stock splits can be implemented for a variety of strategic reasons. Most of the time, a company expects significant growth and wants to hold its shares at a reasonable price for ordinary investors. Employees who receive stock-based bonuses, such as employees at Tesla, will also have easier access to stock. Other strategic examples may also exist. For example, the Dow Jones Industrial Average, or Dow, is a known price-weighted stock index because the stock price directly affects the weight of the index. It is a component that has been vetted for inclusion in the Dow Jones Index. You may consider companies with high stock prices not worth investing in. Overall, there seems to be a pattern. According to Reuters, research by Bank of America indicates that companies that split their stock are worth about 16% better than other companies in the 12 months following the split. However, there can be an indirect relationship with the company's growth and other circumstances, as playing a partial or full role in the stock split indicates that the company is growing and enjoying confidence. On the other hand, those who trade stocks and options often take advantage of the split trading atmosphere, which can lead to a lot of volatility in the markets before and after the split. Tesla and its shareholders will have to go through some additional procedures for this stock split compared to the last time when the board of directors announced its decision on August 11, 2020, and the stock was quickly split. On August 31, 2020, the Securities and Exchange Commission, SEC, set a limit on the number of shares a public company can trade after its last public offering split in December 2020. Tesla is close to the cap and can only issue a 2-for-1 stock split without shareholder approval. Under current rules, this suggests Tesla will report a larger multiplier. Next, the board will vote on whether to approve the stock split, which is sure to be announced shortly after. In addition, shareholders will receive stock dividends to complete the split. For example, if the split again was 5-to-1, you would receive 4 additional shares on the day of the split for every share you owned by the final date. So what effect does a stock split have on options? If options expire after the day of the split, they are affected in the same way as stocks. If you have a $1,000 strike call and a 5-for-1 split is announced, you will receive 5 $200 strike calls. This circumstance gives you more options when deciding whether to exercise or sell. Although Tesla's recent stock split intentions are causing a lot of excitement among investors, Charlene Reinhart, CPA, told Go Banking Greats that the move is just a cosmetic change that won't make your account fatter. As we mentioned previously, investors prefer to focus on the core business. She advised that if you want a chance at long-term success, you should pay attention to measures such as potential revenue, production capacity, and growth in vehicle deliveries. The Motley Fool also suggests adding Tesla to your portfolio only if you believe the company's core business can maintain its high-performance streak after studying the company's financials and prospects. According to experts, if Tesla continues to impress investors, it could provide you with the portfolio gains you've been looking for, and that's more attractive than a stock split announcement. In short, Tesla will simply cut the same ownership pie into many smaller pieces. The total will remain the same, and each existing Tesla share will still be worth the same. Let's go back in time to the summer of 2020, when the company split for the first and only time. Share prices rose between the announcement and the final 5-1 split at the end of August. After that, investors realized that the split didn't make any difference, and some of Tesla's inflated market value started leaking out again. Now, Tesla was crushing the market before the 2020 split, and quickly resumed its impressive performance after this minor short-term chart fluctuation. The market is often a popularity contest, but in the long run, it is an effective weighing machine. That's why the stock is up more than 1,800% in the past 5 years. The stock split 2 years ago was a minor footnote in the grand scheme of things. As a Tesla shareholder, you should care about vehicle deliveries, revenue growth, and free cash flow. The details of how many shares you can buy for $100 are less important, now that most stockbrokers allow us to buy fractional shares in high-priced stocks like Tesla. After all, the company's financials revolve around the Benjamin family. In that sense, Tesla is a great investment right now, with or without the expected stock split. What do you think about Tesla's intention to split its shares? Comment below.